Hey guys, quickly, if you want to see me break down this trade on gold, or this analysis on gold, I should say, uh, be sure to watch this exact video. Be sure to watch the entire video. It's kind of lengthy, but I don't want to promise because I don't really like promising, but I can almost assure you that it's going to be worth your while in terms of understanding things that you may not necessarily understand. So let's go. All right. So today we're going to be talking about a few things that is extremely relevant to what has been happening in the market recently. So I want to first talk about a few things that I think a lot of traders need to understand with regards to technical analysis. And there are a few key principles that a lot of traders oftentimes either don't know about, or if they do know about it, they don't pay attention to it. So I'll talk about these principles very quickly. The first principle is the principle of accumulation. All right. The next principle is the principle of liquidity, which relates to the principle of accumulation. Then we have the principle of momentum. And then last but not least, we have the principles of rejection and the principles of exhaustion. Now, you can maybe this is what I call it. Maybe you call it something different. Maybe you've heard of it being called something different, or maybe you're taught this exact topic in a different way. What I will tell you is these are very important concepts to understand. And I will start with the principle of accumulation. So, accumulation, better known as consolidation, is one of the two states of the market, right? So, the market can only ever be in one of these two states. Either it's in momentum or it's in consolidation. There's no other state. The market isn't going to do anything else. It's either going to be moving or not moving. Simple, right? That being said, it is very important to know when the market is in accumulation. And obviously, you need to know what accumulation looks like. You need to know what consolidation looks like. A big thing that a lot of people once over, right, is they think consolidation is purely sideways. There is such a thing as bullish consolidation or bearish consolidation, meaning the market is dropping, it's consistently dropping, but it's definitely ranging in the drop. It's not a clear drop, right? This now relates to the principle of momentum. As you know, if the market, and I mean this is only basic common sense, if there are only two states a market can be in, which is consolidation and momentum, if the market is in consolidation now, when the consolidation ends, you know that it makes sense that it will go into momentum. If you understand what real market structure looks like, you would know generally where the market is going to go from that point onward, right? So I'll tell you this. With regards to momentum, it is actually very, very possible for you to kind of get an idea of where the market is going to go before it even gets there. And this is why I'm able to produce certain types of analysis way before it happens and most times get it right. Is it because I'm an expert? Is it because I am a guru or a mentor or a prophet or oracle or a psychic? No. It is just by understanding these basic concepts. Nobody knows what the market is going to do, right? And that includes me, right? And that includes your mentor as well. Nobody knows what the market is going to do. We just have a very good assumption. That's it. An educated assumption is what you'd like to call it. Now, the next principle I want to talk about is the principle of liquidity, which relates back to the principle of accumulation and momentum simultaneously. So the principle of liquidity says that the market will never really make a move without going for liquidity first. What that means is very simple. Basically, if the market has to go upward, it needs to first go downward to capture some of that liquidity, because there will be liquidity somewhere below, and in future I'll teach you how to look for it based on what I do, right? It has to go for that liquidity somewhere in order to get the liquidity to be able to use to create that move. You know, we say, and I've said this multiple times, that the money has to come from somewhere. In other words, the winners are feeding off of the losers. That is exactly what is happening. Now, it makes sense that if a move is going to happen, 3, 4, 5 big bullish candles are taking place, that is liquidity that is being taken from somewhere else. That's only common sense, right? So it makes sense that if the market is in accumulation or momentum or consolidation, I should say, and then it drops down really aggressive to say a area where we know that there's a possibility for a lot of liquidity, and I'll show you, don't worry. If it's an accumulation, it drops down into an area where you know that there's a lot of liquidity, and then it rejects that area and then starts to go back in the bullish direction. You have a general understanding where the market is probably going to go from then on. And don't worry, I'll show you that. I'll show you what it means or what it looks like. But understanding this is actually very, very simple, right? It's not easy. Let me make that clear. It is not easy, but it is very, very simple, right? What do I mean by that? You realize there are not a lot of steps, right? There are not a lot of steps. If the market is in a bull trend, it's tapping the trend 1, 2, 3 times. It makes sense that if there's a lot of liquidity in a particular one of those taps, it's going to break the trend. A lot of the time, it's going to break the trend. Go for that liquidity and then continue along the trend line. That is what a fake out most times is. You understand? It took me a very long time to realize that, but it's very simple when you think about it. It's not a lot of steps. So if you can understand what it is you're looking at, you're going to quickly realize that you don't need all of these 1,000,001 indicators. You don't need all of these different tools and this strategy test. You don't need all of that. You don't, right? I've been trading without moving averages for the past few weeks and posting videos on YouTube and stuff just to show you that you don't need any indicators at all. Now, I will admit that moving averages are very useful in terms of finding an entry. But the main thing what we're talking about today, and is very important, is not finding the entry. It's just about understanding where the market is going. Most people, what they do is they want to know where the market is going, right? But before they know where the market is going, they place in a buy or they place in a sell. And then they start to ask the question, I wonder if the market going to go up. I wonder if the market going to go down. That's a very dangerous thing to do. You need to first figure out where the market is going. And then and only then, you can make your decision up and say, you know what? Yes, I think it's going to go up. Let me try to see if I can find an opportunity to place a buy. So that's what I have for the principle of accumulation, principle of momentum, and principle of liquidity. Let's quickly talk about the last two, which is the principle of rejection and the principle of exhaustion. Exhaustion is a multitude of rejections. So think about it like this. If you're seeing price repeatedly rejecting a specific area, so you have a nice big bull market, price is repeatedly going up, it's continuously going up, and then it goes into accumulation, and in the accumulation range, and don't worry, again, I will show this to you. In the accumulation range, you're seeing where price repeatedly hitting an area and rejecting it quickly. It hit the same area again, rejected quickly. Hit the same area again, rejected quickly. You know that one of two things is happening. Actually, most times it's actually the two things at the same time. One, it is exhausted of hitting the specific range, right? And two, there is liquidity below that particular range or hit below that particular area where price is constantly rejecting. What is actively happening is exhaustion, where the market is getting tired of hitting this area. So what happens a lot of the time is it hits that area again one last time, right? But in a really aggressive way, oftentimes way bigger than all of the other rejections. And then after that aggression, after that finishes, you know something? The market just runs away in a big aggressive fashion. So rejection is one move away from a particular area. In one move, it's almost instant. Exhaustion is multiple rejections. So let's go to the chart now quickly, and let me see if I can show you. Let me see if I can make you to understand what it is I understand. All right, because again, I could be completely wrong about all of what I'm telling you, but this is what I understand by what I'm seeing. Let me see if I can make it make sense for you. Yeah? Let's go to the chart now.
12 seconds later.
So we just spoke about 5 different principles that I think are crucial for any technical analysis, right? We spoke about the principle of exhaustion, rejection, accumulation, momentum, and liquidity. 5 simple principles, right? Some people may know them as different things. Maybe you know what I'm talking about, but you don't necessarily know them as these things. That's fine. I just hope you understand these things. So let's go to AUD If you go back on my channel, you will see later, and I think it was like 3 videos ago, you will see where I did this exact breakdown on AUD Now, I didn't get to take a trade. Again, this is just about analysis. So if you notice, there's actually all 5 of the principles taking place here, and I'm going to highlight each of them. I'm going to do it on AUD and then I'm going to do it on another currency pair. So let's look at each of the principles, right? So straight off the bat, we have the law or the principle of accumulation or consolidation. And this is consolidation as well as this is consolidation, right? Both of them are a ranging market. One is just moving sideways, the other one is moving slightly bearish. We also have the principle of momentum, right? Which is the fact that AUD is in bullish momentum currently, right? And I didn't go into detail about it in the first part of the video, but I'll go into detail about it now. Momentum has 2 states, right? So we know that the market has 2 states, which is consolidation and momentum. We know that momentum now has 2 states. Momentum has an overall state and a current state, meaning it can be overall bullish, but presently bearish, right? So you can have a market that over the last few years has been bullish, but right at this moment, it is not presently bullish. So you have to understand that in order for you to get a trade that is in alignment with a direction, your overall and present directional bias, your present and overall momentum must align. So you know that if I go on the daily time frame, AUD as you can clearly see, is overall bullish, right? Good. And on the 50-minute time frame, as you can also clearly see, if we go back a few days, it is presently bullish as well, right? Good. So we have consolidation and momentum present. Good. The next law is the law of liquidity, right? Or principle of liquidity. So we have an area here. So we have 2 areas in which there are liquidity areas, right? Or liquidity zones. And you have price hitting this area. So now you have the law of liquidity or the principle of liquidity and the principle of exhaustion taking place here, right? Because liquidity is above this zone. And how do we know this? Price hits this area repeatedly, making traders believe that it is a resistance, meaning we know that there are stop losses of sellers above here. There are buy stops of buyers over here. And then you have the same thing under here. We know that this is a liquidity area underneath here. It's a liquidity pool underneath here because there are buyers entering every time price hits this area, right? And look at what happens. If we drag it out, remember I said that sometimes you're going to see it do a really aggressive move. So this, all here is fine. All here is fine. Look the aggressive move I was talking about here. So now we have the difference between exhaustion, which is this is exhaustion, and this is rejection. So we have 4 principles active here already. You have the principle of exhaustion, excuse me, principle of rejection, the principle of accumulation, and the principle of momentum. And well, we have the principle of liquidity under this zone and above this zone. If you understand that in order for the market to continue in a bullish direction back up to this area, which I have highlighted up here on the 4-hour time frame, well, 4-hour, daily, whatever, you know that again there's liquidity up here. Why is there liquidity up here? Because this is the last area price has dropped from, meaning there's a lot of people selling anywhere within this area here. How do you know there's a lot of people selling? Because the market sold off right from there, right? If you even put, let me show you something here to carry you for a loop as well. If I put the RSI, right? If I put the RSI on as an indicator, not for me to use it, but if I put the RSI indicator on, how much do you want to bet that at this point here, right? I'm going to draw it. At this point right here, there's going to be overbought condition on the RSI. Let's test that theory, right? Let's test that theory. And we know that traders, when they see an overbought condition, they sell, right? Let's see. Look at here. That's this. I drew it a little too high, but that's this. Oh gosh, sorry. right? I drew it a little too high, but right here, oh gosh, right? You have an overbought condition right at this area, meaning we know that there's liquidity entering the market at this area, right? You don't need the RSI to show you this or anything. I'm just showing you. This is what a lot of traders will be thinking. So you know that there's liquidity above this area. So we know that overall, AUD/JPY is bullish. We know that there's liquidity above this area, and we know that it makes sense because it is presently bullish as well, that it is most likely going to continue back in this bullish direction, back up to this area to go for that liquidity before it potentially reverses. Anytime the market wants to move, always remember this. If you don't look for that liquidity grab, some people call it stop on, some people call it stop raids, whatever you want to call it. If the market doesn't go for liquidity prior to you getting into the trade, oh, trust me, you will most likely be stopped out, right? And you can see that here. Look at that is a beautiful example of that right here, where you have all the time it's in this consolidation range. It goes to the liquidity and then it now begins to make its move, right? So it's very simple. Wait for the liquidity grab, and then after you see the liquidity grab, that's a good place to begin to look for an opportunity to enter your buys. And you can enter buys based on so many different entry tactics, right? But the analysis, if you go back to the video that I produced, I think it was 3 or 4 videos ago, all right, it'll say this analysis on AUD/JPY probably sucks. If you go back to that analysis, right, you will see that I had this exact thing drawn out. This exact thing. Why is it even from the area, the very area I thought it would turn is where you see the bodies of the candles stop? Yes, indeed, it did go down a little lower. But why is it that right from this area? Because I know that let me just say I know. I have a general idea that, or a general belief, a general concept that the market is going to go for the liquidity under this area and then try to make its move. Yeah? So that's AUD/JPY. Let's also take a look at gold, which is another one that I've been looking at recently, right? And I also produced an analysis on gold, both in the Trading Nut live stream on Tuesday, right, which was 2 days ago, right, or 2 nights ago or whatever, right? And I produced another analysis on it yesterday, which both of the, all of that information and all that detail is in, I think it is either the last or second to last video that I posted on this channel here. So you can go check that out. And I'll probably put the link to it below. But I want you to pay attention, more or less exactly what I said, right? More or less exactly what I said is what has been playing out, right? So I want to wait for this to, right? So we have this here. So I said even to this area, right? This is the area that I had drawn here because I'm anticipating gold to try to get to this area. I also said that I don't think it's going to try to get to this area here on that day, which was yesterday, right? I thought that it was going to accumulate, go up, and then come back down. It actually broke this line here, but it did accumulate. Look, the accumulation here. Let me move it just to show you. So look, the accumulation here. It went up from the accumulation, right? So it went up here from the accumulation, up to the trend or up to this line that I had drawn, and then back down again. Why? Why is that a thing? Why is it that? Because I knew, let me just say, I keep saying, I keep have this thing that I knew, but I have a general understanding of this is where liquidity is. Why do I believe that there's liquidity here? Because of this. We know that the dealer has been creating sells in this area. So it makes sense to try, and something that you may not be able to see on TradingView right here and now, but when this was occurring, when this was happening, the market was actually being manipulated by virtue of the spread, because this was a CPI. This was not CPI, PPI news event. So you know that the market was being manipulated. Also, if you go deep enough into what I have taught in the past with regards to M's and W's and reversals and all of that, if you understand that, if you really try to find one here, it's actually very much in broad daylight. It is out in the open, right? Where you have your trend line, meaning traders will be thinking that it's buying it. It wasn't going to buy, it wasn't going to sell or blah, 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 blah. You have 1 tap, 2 taps, 3 taps of your trend line, right? So you have your taps here. Let's see if I can draw them. So you have your taps to your trend line. 1 tap, you have 2 taps, right? And then you have 3 taps to your trend line, right? You have the dealer going up, creating a high. Interesting, eh? dealer going up creating a high, stop hunting that high for the second leg. So he goes up, create the high, stop hunts that high for the second leg, and then drops it, breaking this area, making anybody who thought that it was going to continue to buy from this area, stopping them out, going for this area, which is again a liquidity area here, and it's now accumulating to try to see if it could capture some more orders, meaning it's most likely going to be creating another bull trend of sorts to get people to believe that it's probably going to continue to buy, when in actuality it's probably going to sell, based on what I'm seeing here. My analysis thus far has been playing out more or less exactly how I wanted it to, right? And yeah, it actually looks pretty good. But you realize that I'm using the principles that I've been telling you. I'm using the principle of liquidity. I'm using the principle of exhaustion. I'm using the principle of rejection, momentum, right? Let me show you the principle of momentum. You're probably saying, well, gold is bullish overall, right? You're correct. Well, that's not overall, sorry, presently. You're correct. But this and this and this is something that you have to draw your attention to. Why? Because this is now a potential head and shoulders pattern, right? Why is that important? Because it is the potential reversal of this bull trend here. And if we look at the directional bias of gold, it is bearish. Gold has been bearish. So this here is the potential makings of impulse move to capture buyers, capture that liquidity. Remember I said that all of this here, this is liquidity grab, meaning it makes sense that the dealer is going to try to make people think that it's going to buy, right? And in actuality, sell the market, right? The market will never move without going for liquidity first. With such a big drop on gold happening, it should go for a lot of bull momentum, go for a lot of buyers to capture that liquidity to then drop. Isn't it also interesting where it is possibly trying to turn? It's interesting, excuse me, that it's trying to turn in this area where you know that there's a potential last amount of liquidity. So I really hope that, you know, I mean, I know it's really messy and such, but this is just how I think, right? I'm just trying to allow you to understand what it is I'm thinking and why things play out the way that they play out, right? Am I an oracle? No. Am I a psychic? Am I a prophet? No. Am I an expert? No. Am I a mentor or a guru? No. I'm just a normal trader, just a normal person who's trying to make sense out of what I'm seeing. And if in your analysis, you cannot break it down like how I'm breaking it down here, even if you are wrong, you should be able to break down what it is you're seeing. If you cannot do that, you're not analyzing the market as effectively as you should be. Because I'll tell you this. Remember I just said, and I'll end this video here. Remember I just said that you want to be able, obviously, to acknowledge the fact that you don't know what is happening, but you do want to at least understand what you're looking at. So it makes sense that even though you might be wrong, at least you have a general understanding of what you're seeing. That is where an edge is beginning to build. That is where an edge begins to form. You understand? Because you understand what it is you're looking at. It mightn't be the truth, it mightn't be correct, but at least you understand what it is you're seeing. And that is data that you can use to build a bias and to build a breakdown on. Yeah? So, I really hope that you enjoyed this. I hope that because it was a kind of longish video. I really hope that you enjoyed it. You understood it. I hope you watched it to the end. It is, you know, it's really important that you do watch it to the end. And yeah, other than that, hit subscribe if it is you like this. Hit like. All right, comment below what you think. Comment below, do you agree with my thought process? Do you agree with my beliefs and my concepts? All right, and yeah, I will see you on the flip side.